Welcome to Translation Confidential. This is Peter Argondizzo and Patrick Daly, and today we are joined by Florian Faes, Managing Director at Slator, and he's joined us on an incredibly slow news week. I mean, nothing's really going on in international economics or language access, so I'm not sure what we're going to talk about today.
Yeah,
Let's start
slow news days. Yeah, we're only going back 100 years in terms of trade policy, but yeah, welcome everyone.
Let's start there. I saw your latest update this morning in your newsletter, and obviously the lead was about tariffs. Let's start there. Obviously, you and the folks at Slator think that this is going to impact translation providers. Tell us a little bit about that, Florian.
Yeah, it's a very, I guess, macro question that has become very quickly hyper relevant. I guess Donald Trump has been talking about tariffs for 40 years, if you look at the past, but like that, it would be implemented that quickly, I guess, comes as a shock to most countries, and also the way it's calculated seems kind of back of the envelope, but let's not look at that. So let's look at the language industry specifically. So we've been on this, 40, 50, 60, 70 years kind of macro tailwind of globalization opening up. Nixon went to China in like 72 or 73 and worked with China to open up China to the world. And, that was one big step. So, the Soviet Union disappeared. And so basically a lot of steps have contributed to the world opening up in terms of trade, in terms of, exchange of goods and services, companies exporting everywhere. And of course, that has had a very positive impact on generating demand for language services. Because at the end of the day, if you want to sell in a country, you probably need to localize your products and services, your software, safety instructions, what have you, right? So there's the whole gamut there. But if if this is the first time, at least in my lifetime, that you've had one immediate and extremely large step towards reinstating something as kind of blunt as tariffs, which may put the brake on that exchange of services and goods, and is obviously not a positive for the industry if they go through with it. I mean, it's still, we're recording this in early April 2025, so who knows, maybe in a couple of weeks it's been a little bit maybe it's not going to be implemented as dramatically as it's announced now. But yeah, overall, decades of progress towards more globalization is now being kind of rolled back.
I think that's the sad thing. For me, I think some of the headwinds that we were seeing outside of political concerns, I thought were actually going to maybe turn into opportunity. So whether that was the advent of AI, I think a lot of translation providers were seeing that as headwind. I actually thought that was going to flip around a little bit and turn into tailwind with expansion of the markets. I think this is a huge blow. We've thankfully been around for 30 years and we've seen a lot of economic disruption and all sorts of different forms. But you're absolutely right. This is a blunt instrument, and I don't even have to talk about the politics of it. But what I would say is that you see equal disdain on the right and the left and globally from people that we've considered our allies for almost a century, and now we're saying, yeah, you're really not. So we're going to try to take care of this feeling that you're taking advantage of us in some way. And, it really just isn't the case. I mean, if you look at a country or some of the developing countries, even that we've really hit hard, like a Vietnam, well, of course there's a trade deficit. I mean, that's an impoverished country. What are they possibly going to buy from us? And why would they buy more of it than we, a huge country, are going to buy? And I think it's going to add to the headwinds, not only for our sector, of course, but for every other sector as well. It's terrible.
Do you see this as with a direct effect on the language services industry or indirect? Because, and I could be wrong here, but like services won't be subject to the tariff. Like goods will be like physical goods that are traded, but translation is typically a service. So while it may not be that the rate of translation goes up, the cost of translation goes up because of the tariffs. I think you might see people pulling back their translation or language budget because they have to now spend that money elsewhere.
I'd be curious to hear what Florian says, but for me, I think Florian hit on it briefly, is that we tend to be secondary, right? We tend to be an add-on. So a client decides to produce a good and then we have to either translate the instructions or translate the UI or translate the website that supports the sale of that said good. So I think because we're secondary, I mean, I know for us, a lot of our clients are manufacturers, and I have to imagine they're all thinking about tightening their belts. And that's where I think the concern comes. I mean, maybe the only saving grace, and Florian, I'd love to hear your comment on this as well, is, I think a lot of countries now are going to tighten the screws on us a little bit on regulation. We've seen a lot of work with the Canadian Bill 96. Suddenly, though, now everybody is, I think they're getting guidance like, remember how Canada used to be a little bit lenient on that sort of thing? I mean, the rush of French Canadian translation we've seen in the last 2 months has been crazy. I spoke to my brother who lives in Bologna, Italy, the other day, and he's like, oh yeah, there's all sorts of talk here in the EU that we're really going to tighten the screws on US manufacturers in terms of their documentation and translation. So, I mean, perhaps, but I do think that economically, I think it's going to be a tough burden to bear for a lot of our clients. Florian, what are you thinking?
I mean, there's a couple, I guess the first order consequence is just general slowdown, economic slowdown, right? I mean, you see people talking about a recession, which is much more likely now than it used to be. I mean, you can talk about why they're doing it. Maybe they want to bring down the yield on the 10-year or something, but that would be the second order effect of this. But a second and third order is just that deglobalization mindset and that countries becoming more insular, right? I mean, China has been reluctant in opening up now generally for a couple of decades, but just that, you have these blocks that are forming again, the European Union or Europe, then the US is now kind of a block, and then China and Asia. So yeah, you're slowing those trade flows, and it could have gone the other way, and going the other way and the more international world is certainly much better for the language industry generally. It's very macro. It's kind of hard to pinpoint it down, but if countries open up and export into each other's markets, that tends to be
Generally
much better.
Yeah, it'll be interesting. This is likely something that we need to revisit in 6 months to understand the full impact. But, I think the lead thing for me is business hates uncertainty. I mean, we've seen that over 30 years. And, with a level of consistency, who knows, by noon today, it could be different. So
in this case, we hope so.
Yeah, I absolutely do. But it seems like he's pretty dug in. So we could obviously spend a whole show on this, but I want to give Florian the opportunity to talk about some of the cool things that are going on at Slator. And I think in turbulent times like this, it's really good to see your colleagues and chat. So I'm looking forward to some of the upcoming shows, but I'd love to give you a chance to talk a little bit about SlatorCon. Tell us a little bit about those upcoming events.
Yeah, so we decided to do two conferences this year in person and also two remote ones. So we have one coming up in London on May 23rd, and then we have one coming up in your part of the world in Menlo Park in early September. Great forums to get maximum return on time. That's how we try to build them. So you come in for one day, you meet everybody. It's around 150 to 200 people. So you get a chance to talk to, most of them if you're a good networker, and you take advantage of kind of the welcome reception and the networking reception. And for example, in London, we have an incredible lineup of speakers, a CEO of RWS, Ocolot, Phrase, AppTech, SmartLink, Aclaro, BeerWorks, etc. So we have a lot of the industry leaders. We're bringing in a lot of the buy side as well, kind of head of localization. We have a presentation by Wise. We have investors coming in that give the outside view, because that's sometimes very interesting. Not sometimes, it's always very interesting to get the outside view as well. And investors, in this case, we picked kind of on the earlier stage, kind of VC and growth capital investors. You see that, like, it's very interesting to see their view on the language industry and where it stands, because we tend to sometimes become a bit navel gazing, right? If we always go to our own conferences and look at what we're doing. So we try to bring in this external yet skin in the game component with the investors. And then of course we have also tech. Yeah, I mean, look, great location, just a great one day event where we really work extremely hard. I can tell you that, to make these conferences happen. It's not easy to put on shows like this if you're not a kind of fully razor focused event producer. So we do a bunch of other stuff as well, but we just feel that it's hard for somebody that's not as kind of deep in the industry to put on something that's this relevant. So yeah, working very hard here to make this happen.
Wonderful. If people are interested in signing up for SlaterCon, Florian, just visit your website, I would
Visit your
imagine.
website. Yeah, and you'll
Okay.
be greeted by all kinds of links to the actual registration.
I think it's interesting that you're doing hybrid events. You're doing some remote, some in person. Tell us a little bit about that.
We like to continue the kind of COVID era tradition of doing what we call remote events, SlaterCon remote, because, in this still very global industry, the language industry, if you do a conference in person, you need to do it in big catchment areas. That's why we do it in London. A lot of people, almost 10 million city. You do it in the Silicon Valley, a lot of people there. But there's always going to be a lot of people that can't travel to a conference, right? But they would also benefit from that type of content. And so obviously we put on the remote, the price is a lot lower. We do try to recreate the networking because these platforms have progressed quite a lot also since COVID. And so there's like a networking component in it. And yeah, we just like to do it. We also record them, and you can, subscribers can actually go and access the recordings. So it's just, yeah, it's a great content generator for us as well.
Wonderful. Yeah, thank you. Patrick, you've got the next question.
Yeah, I was gonna say I love that idea, and the idea of recording things and kind of making them available as webinars after the fact. That seems like something that was kind of born out of COVID, but it's been a really positive advancement of, okay, you can't attend the conference. That's okay. If you're a subscriber, then you can access it later. So that's really awesome. I think the next thing we want to chat about is kind of related to our first point around kind of macro trends and just, Florian, what you're seeing in terms of mergers and acquisitions of how you work maybe with the buyer side, the seller side, and if now, given kind of the economic situation, if you expect M&A to slow down for the rest of this year.
We can start with that. I don't expect it to slow down. In fact, I think it's going to accelerate. It has accelerated a lot in the past 6 months because of supply. There's a lot more sellers coming into the market because, founders that have run their businesses for, 15, 20, 25 years. You see AI coming in. You may not have the energy to really focus on getting through that next 3 to 5 year cycle of innovation and kind of the nimbleness that's required. But you also recognize that you have this asset, you have these extremely valuable client relationships that are not going to get disrupted tomorrow morning by ChatGPT, right? So you've built this up over, again, 10, 15, 20 years. And so we're seeing a lot of demand from these types of sellers that want to now go to market. And so this is going to accelerate the M&A because the buyers have become a little less conservative or a bit more open to actually closing deals. And, you can check our website, right? There's a number of buyers that remain active and companies that really are bullish on the next 5 to 10 years are seeing very good opportunities with these sellers. But it's become from 5-10 years ago was much more of a seller's market. Now it's more of a buyer's market. And yeah, we're seeing deals close now, whereas like a year or two ago, it was much harder after kind of interest rates went up and a lot of bigger buyers struggled to get the financing. Now they have more financing available, at least now. Let's see what happens in the next 3 to 6 months.
Yeah, exactly.
And so we're very active in that. We have all kinds of different offerings. We work together with an advisory firm that we've worked together for 5 years, and we can kind of provide the full service there for sellers.
Oh, that's wonderful. So buyers and sellers alike can work through Slater, in other words, to start the ball rolling on a transaction.
Correct. So on the buyer side, we tend to be the scouts, right? We go out, we unearth opportunities that just wouldn't come your way unless you've been in this for 5 or 10 years. And, there's certain types of things that we just know. And we're in touch with many people that if you're like in a corporate development department, a sole person, like it was just difficult for you to unearth these types of opportunities. So we're acting as scouts, we're doing the introductions, and then typically we would hand over. On the sales side, again, it's kind of the full spectrum. So you have your LSP, you have your tech company, you can come to us, we can structure everything from the initial list, who do we approach, to the investment memo, to then shepherd everything through due diligence and closing and signing and all of that. So yeah, it's we run this out of London. Our head of advisory, Esther Bond, is based in our London office and leads that part of the business.
Wonderful. Follow-up question on that, Florian. In terms of valuations, as a buyer, we've done a couple of deals ourselves, and we're always looking to do another. We're doing more deals. We hope to do more this year. One of the things that I think as a buyer I'm frustrated about and want to hear a little bit about what you're seeing in the market is valuations.
Mm.
Obviously we're not a massive agency. We are not RWS by any stretch of the imagination, the direct opposite of that. We're looking at smaller deals. And what we tend to find is a little bit outlandish expectations sometimes on earnings and valuation and how that works. And what we're seeing quite consistently is people wanting to sell on projections. Like, listen, we know the last 3 years have been miserable, but we're going to get it done. We're going to fix it this year. And we want to sell on some multiple of what we think is going to happen. And it's hard for us. Obviously, they think, well, we're biased because you're the buyer. Of course, you're trying to get the lowest price. But in essence, what we're really trying to do is I have to sell a story. If I'm going to use funding, I have to sell a story either to a bank if I'm using traditional funding, or to my leadership team if I'm using internal funding. Or we get approached by equity firms all the time. I've got 2 that are very interested in us to do deals on the larger end of the scale if we look at for some larger deals. But I'll have to sell that story. What are you seeing, or what are you seeing that same sort of, let's call it a disjointed view of what the sale price and what the buy price should be?
I think this is where a good advisor can make a world of difference if they do the prep work accordingly and prep the seller to not have these types of expectations. So we see our job as actually managing these types of expectations before we go into the process, right? And I mean, again, valuation in a services business is typically as a multiple of EBITDA, like earnings before, interest, deductible, tax, etc. Kind of a smaller, let's say like 3, 4, 5, up to maybe 9 million revenue business that has a good 10 to 15% EBITDA margin, you would expect something like 4 to 6 times EBITDA. If it's a little less profitable, if the trend has not been super strong, now in the current market, you go down to things like 3 times EBITDA, which used to be incredibly low and kind of, scorned at by certain sellers. But now there are sellers out there that would actually accept that. So we see our job also as, again, making sure that these expectations are well set before you go into a process. Because I understand that it would be frustrating for the buyer if you spend all that time and energy of looking at a business. It's not easy. It's not just you look at the investment memo and that's it, right? You may even go into due diligence only to then find out that expectations are out of whack. And sometimes they are. I agree. Sometimes they are. And sometimes people do remember fondly the days of like 2018 or 2019, when you had a bigger cohort of buyers competing for targets, and then you would see much higher multiples for certain businesses, and those days are just gone. So you have to manage those expectations early on.
I love that. I would say amen to that, Florian. I hope that we run into more buyers or sellers that are prepared with that ideology.
Yeah.
I mean, oddly enough, we've even recently run into a company that was incredibly well run. It was almost kind of the flip of that, where it was a very small business, incredibly well run with a really high profit margin, but the owner did such a good job that I think she was basically attached to the business, very much. So it was hard for us to come up with a number to handle the risk for handling a buyer, a concentration. She had a big concentration. And also, I think she's such a dynamic individual that I don't know that business or that book of business survives when she's removed from it.
That's a big part too. That's a very big part. Yeah. And some buyers are actually, or sellers are also not mentally ready sometimes. Like they try to maybe test the waters, which I usually strongly advise against. Like I think once you go into a process, you have to be fully committed to eventually let go. Right. And let go also in that case means maybe you should set the business up so when you leave the business, if you do plan on leaving the business, that there's a strong second line of management in place that can run the business. There's a lot of buyers that may not necessarily want to just bring in their own people. They're actually relying on the people that are there at the seller. So set it up so it can survive without the owner eventually.
Absolutely. Patrick, do you have another question? Otherwise, I'll just keep capitalizing all the time.
No, it's all you. I just say my observation is if you want to get far in business, learn your finances, because that is the engine that keeps everything running. And that's when you guys were talking about M&A, it all boiled down to finance to me.
Yeah, I would agree. And I think, Florian, is that something that you see? I think with a lot of, we're experts in what we do, which is language. And then I think a lot of owners don't necessarily have, how to read a balance sheet or how to read a P&L statement.
Yeah, I mean, especially in this industry where the barriers to entry at the lower end are so low, right? You have a lot of stories where like a linguist, was very good at being a linguist, and then they got more business they could handle, and then they asked a friend, and then they just over the years kind of build it up. Like, at what point do you say in that journey, all right, let me step away from the stuff I've enjoyed doing and let me look at finance now, right? Let me spend 1 year become like an accountant level finance person. So if you do consider selling your business, you should also that, make sure that you have your ducks in order in the finance department, and maybe even if you're a little bit of a bigger business, hire a strong CFO, controller, get a great accounting firm, get a lawyer in place. All of this helps a lot.
Definitely. Great advice. All right. One other point. There was a recent buyer's report that you released at Slator, and I loved it, by the way. That is full of really, really good content. But I want to focus on one point there. I'm trying to provide a silver lining, guys. We've talked a lot about headwinds today, but I want to get your take on this, because is this still a silver lining? This might be dated information already, even though it's brand new. In the report, you mentioned that 40% of buyers expect to increase their translation budgets. 34% said stay the same. So I'm thinking to myself, well, that's 74% that are going to do at least the same or better. And then even you provided some additional, and I'm off the top of my head, I think there was 10% of those folks that said they were going to increase were going to increase their budgets by 20% or more. I thought, wow, this looks like tailwind to me. This looks really good. What are your thoughts on that, Florian?
Yeah, I was as surprised as you when I looked at this, and there's not too many caveats. The only caveat I have, it's not 500 buyers. The sample size is 50. Why is the sample size 50? It's because we asked a lot of questions. So just maybe step back. It's a survey of major localization buyers, right? Not small ones, but big ones with titles that would include the word localization or language services or something like that. So people with a big budget. And we make them jump through a lot of survey questions. So it's not something you can do in like 2 minutes. It's a somewhat nuanced survey. So that's why it's quote unquote only 50. So that's the caveat. Other than that, I mean, it is what it is. The data, 40% did say they plan on increasing their budgets. And 34% said they keep it the same. That said, though, 26 said they would decrease, which is a larger number than you would have expected maybe 5 or 10 years ago when everything was gung-ho and all the budgets were going up, right? So you have a quarter of the heads of localization saying, well, I'm kind of pulling back here. And you need to see this in the context of saying you're decreasing your budget, in a sense, also means you're kind of rationalizing away a little bit part of your own role and your own unit, right? So it's probably very hard to go on the record in a sense and admit that you're going to have to scale back, right? So there's maybe a little bit of just, I wouldn't call it wishful thinking, like optimism also on the side of the buyers that we're going to continue to increase, we're going to continue to grow. We're also surveying companies that are strong, like that they're growing strongly. Like some of the SaaS companies, still software as a service companies, they still have 20-30% annual growth, and they do need to scale up. So those budgets by default will grow as the company's growing. But I was surprised, as surprised as you are, that we still had that strong growth in that.
I'm going to continue to think optimistically, because otherwise the other option is terrible. So I'm going to go with those numbers, Florian, and I'm going to pretend that this whole tariff discussion didn't happen, just so my Friday is pleasant. So I'm just going to stick with that. Well, this is the part of the podcast that we get to that we always ask our guests. And when it's just Patrick and I, we do this internally as well, as kind of what's the biggest takeaway? We talked about a lot of different things today. So Patrick, why don't you go first, then we'll have Florian, and then I'll close out with what's the biggest takeaway from today's discussion?
Yeah, I found it interesting on the M&A side that kind of the prediction is that will actually increase. I thought that with kind of the larger economic situation that people might be slower to dole out some money, but it seems like we talked about, it is kind of a buyer's market. So I'd be interested to see by the end of the year what kind of strategic purchases happen throughout the market, and to see kind of what types of companies are getting scooped up and who's doing all the buying.
Wonderful. Florian, what's your biggest takeaway from today?
That times have never been more uncertain than they are now in my 10 years with Slater. I mean, maybe for like a brief period of 1 week post COVID, like March 2020. But other than that, times have never been more uncertain. We talked about a lot of things today. We talked about more on the macro side. So we have now the macro picture, which half a year ago was very, very different. So we have macro, we have AI, and you combine the two together, it's a very uncertain environment, which also, as every entrepreneur knows, has a lot of opportunity buried in it. So let's focus on the opportunities as well.
You know, I loved and that's one of the things that I took away from the newsletter today, the Slater newsletter today, about the deals. There was quite a few deals, and it looked like some of them took advantage of some opportunity. In other words, unfortunately, the misfortunes of others, the Technicolor deal that you mentioned, you know, it looks like there's opportunities out there. Now, that's a hypothesis that we have. So that's kind of my biggest takeaway. It's interesting for me to hear some reinforcement on that. Our CFO, who's leading the charge for us in terms of acquisitions, our hypothesis is that, you know, when I started 30 years ago, I was, you know, relatively young. And there were a lot of agencies. That was the advent of the EU, the advent of TMS. There were a lot of agency owners that started in that time period, but were a little bit older than me. And I think those people are looking to exit.
Yeah.
It's our hypothesis. We're also thinking that a lot of those owners are like, AI, meh, I don't want to deal with that. And I think so far that's proven to be true. We've had a lot of good conversations with agency owners that are looking to exit just because they don't want to do that next hurdle. And I do think that economic adversity, terrible for all of us, might lead to more deals. I mean, some of those might be distressed deals, but I definitely think it's going to lead to more deals. So that's my biggest takeaway. I was interested to hear a little bit of reinforcement. It's always nice that, you know, I think what the term Florian uses, you know, gazing at our own navels, that I never want to believe that we're drinking our own Kool-Aid and like, oh yeah, our hypothesis is spot on. I always like to hear when I get reinforcement from experts in the field that it could be correct. So really great. Well, Florian, thank you so much for joining us. It's always a pleasure to see you and chat. I would encourage all of you to check out Slater. Resource for news. Your ears must be ringing over there all the time because Patrick and I quote something from your newsletter every single episode. Highly suggest everybody take a look. I hope to see you at one of the upcoming Slater cons. Thanks for joining us, Florian.
Thanks, Peter. Thanks, Patrick. It's great to be here.